Gordon Johnson was just on TV and he insists that the Tesla Investor Day was a complete disaster and that Tesla stock is going down all the way to $24.33 per share. Let's break this down.
Gordon Johnson, we know that you have not been the biggest fan of Tesla. The rest of Wall Street seems to be agreeing with you, at least in part, given the 5 to 6% drop in Tesla shares that we're watching right now on the heels of the Investor Day. Did anything happen to make you more bearish on Tesla, or are you a little bit more measured about it now?
Let's talk specifics.
Specifically, lies that Gordon is about to make up. Unless this time is going to be different.
So essentially what you had is you have a bunch of fanboys and Tesla cheerleaders like Pierre that are writing checks that they can't cash.
You did not seriously just actually say that. You just called Colin Rush, who is the highest ranking analyst on all of Wall Street that analyzes Tesla. There is no one else on Wall Street who is ranked higher than Colin that also analyzes Tesla. And Colin currently has a hold rating. He does not say buy. He does not say sell Tesla stock. He just says hold it if you already have some. Don't buy it if you don't have any. He's certainly not a fanboy. And I don't even think he's a cheerleader. I don't think you can even go that far. And he was struck by the details that he learned at the Investor Day. Take a look. Here's what he said.
Colin Rush from Oppenheimer. You know, one of the things I was struck by in the presentation was the operational efficiency metrics that you guys are talking about.
Let me say specifically what I'm talking about. Headed into the much hyped Investor Day, Tesla talked about, or the fanboys talked about, either a new model being produced.
Here is a clear hint of a van of some sort coming out, and a compact, which would be built on the next generation platform. And they said multiple vehicles will be built on the next generation platform. So what's your point, Gordon?
That they were going to talk about the severely delayed Cybertruck, when that was going to come out.
Whoa. The reason why the Cybertruck was delayed is because there was a shortage of batteries. If you introduce a new model, you just create much more complexity, but you don't make any more money. You make less money. Why should have Tesla introduce Cybertruck back then? Tesla was constrained with batteries. Now that is changing, so that is why Tesla is going to launch the Cybertruck.
They were going to introduce a new affordable $25,000 car.
There's absolutely no reason to announce it officially with a prototype unless Tesla is about to start producing it, which is exactly what I have been saying for many months. But Tesla actually officially, indirectly announced that it can already produce that car with ridiculous profit margins. Tesla said that the drivetrain right now is just $1,000 for them to make. And Sam Coor says that typically drivetrain is 25% of the cost of the vehicle. So you do a little bit of math here. You give it a pretty good battery, because if a vehicle is going to be smaller than the Model Y, this is going to be plenty. And you have your $25,000 car. Tesla can already make this. And please, Tesla, do not announce it until you are ready to actually start delivering orders very soon, unless we have too much demand everywhere, so that even if you do cannibalize some of the orders for the Model 3 or the Model Y, it's not a big deal.
Or they were going to announce new things around robo-taxis.
Kathy Wood just said that they have found it's even more important to have an abundance of data than she previously thought. But then you have another problem. You have to train your models based on that data, and that is extremely difficult. So if you can improve the speed at which you train your neural nets, that's a big win. And here's what Elon said about that just now.
In terms of training, we have one of the biggest neural net training systems in the world, and that we expect to increase that capability by an order of magnitude by the end of this year, and probably another order of magnitude by the end of next year, with some combination of NVIDIA and Dojo. So I'm not sure the scale of that is quite dawned on people. It's enormous.
2 orders of magnitude, by the way, means an improvement of 100 times.
None of that happened. In fact, what happened was for 3 hours, Tesla spoke in vagaries, and you had a bunch of engineers come up and talk about things that Tesla has already done. And the CFO refused to talk about any numbers. In fact, he said he's not going to talk about Q1 and Q2. Why? Why is he not talking about that? Let's discuss that briefly.
Gordon, could it possibly be, and I know this sounds like a conspiracy, that they did not talk about short-term numbers because it's called an investor day, meaning you invest for the long term. You're not a trader, because that would be a whole different kind of event. That would be more like a earnings call for that particular quarter. That's where we talk about short-term numbers, not on an investor day where Elon specifically said he wants questions about long-term value creation, not numbers about Q1 or Q2.
Thus far this year, fundamentally, it has been a horror show for Tesla.
Oh yeah, I am absolutely, truly terrified and horrified that Tesla stock doubled in about 1 month. Because now I'm not able to buy Tesla stock cheap. It's still way undervalued, but still, it was a whole lot cheaper.
What do I mean? They've engaged in margin-slashing price cuts.
Here's the problem. In previous videos, I shared with all of you guys that there were many people that ordered Teslas before the huge price increases a long time ago, and their cars got delivered or end of November, middle of November, when Tesla started cutting prices. So we don't really know yet how these price cuts will actually impact Tesla's margins until we actually get the quarterly report. Because perhaps no one really paid these high prices that Tesla listed on the website, as Tesla just fulfilled the orders from the backlog at lower prices. But even then, long term, we expect many more price cuts for Tesla vehicles because the volume is going to be so much higher and the costs are regularly coming down. And so we want to pass that along to the consumer to create more demand so we can make more vehicles and deliver more vehicles. That is all part of Tesla's plan. You can disagree with the plan, but that is the plan.
In fact, they're offering cars in China now in the $30,000 range. And despite that fact, the first 8 weeks of the first quarter, if you look at their cars sold per day versus the first 8 weeks of the fourth quarter, it's down 20.1%. They are getting annihilated in China by the competition.
Here are BYD sales in China from Tesla Daily. Could it possibly be that the sales are down in the whole industry in China? Could it also possibly be that the Chinese New Year took place in January this year, and in the first 2 months of the last quarter, we did not have an extended holiday such as the Chinese New Year, where everything gets shut down? Not exactly a very fair comparison. Let's wait until the end of a quarter, and then we can do a more fair comparison.
And you're seeing the same thing in Europe, where their inventory is stacking up despite aggressive price cuts. Let's just think about this, Dom. Let's just talk about the numbers. They did about just under $10,000 per car in profit in the fourth quarter. They've cut prices by about $6,000 per car. So if you assume they get $1,000 per car of price savings and modest price hikes, you're talking about an EPS number, assuming they can sell 1.8 million cars this year,
right,
of under $3. That's a multiple of 70 times earnings in an industry that trades at 6 times.
We don't know how many vehicles Tesla sold at these ridiculously high prices. If it turns out to be very few, then these numbers that Gordon is saying are not really real. What Gordon is presenting here sounds like facts, but this is just speculation. He may turn out to be right, he may turn out to be wrong. It's speculation, not facts. And then lithium prices are falling off the cliff. And here is a very difficult question. If commodity prices go lower, which is a huge part of Tesla's costs, do the costs for Tesla go up or go down? Something to really seriously consider. GM has a multiple of about 6 or 7. You know why? Because when I look at their sales, their deliveries, in 2011, GM sold 9 million vehicles. In 2016, 10 million. In 2021, just a little bit over 6. These companies are not growing profits and revenues and deliveries. Tesla is increasing its deliveries by about 50% year over year on average. That is why you will get a higher price to earnings multiple. It does not depend on an industry, it depends on growth.
Right now, Tesla is valued at more than the next 6 largest automakers combined, despite selling just 4% of the cars that those automakers have sold on a trailing 12-month basis.
All right.
And when you consider all that, right, they're struggling to sell cars right now, massive price cuts, margins coming down significantly, and 2 of their plants are running at 20 to 40% utilization. This is a pending, we think, problem for Tesla.
Okay.
And to speak in vagaries, as I think Pierre did, and not focus on those facts, I think is why there's going to be some negative surprises later this year.
Gordon Johnson speaks in specific lies. And he has never been positive about Tesla stock. I mean, how could you have not been positive in like late 2019 or late 2020? I bought Tesla stock in early 2019, by the way, and I watched my stock go down about 50%. Woo! The moment that the Giga Mexico opens, Gordon is going to say, this factory runs at less than 1% utilization. You're supposed to be producing 1 million cars per year there. You only produce like 2 vehicles. You are not running at full utilization. He somehow thinks that you can produce or utilize 100% of factories' eventual utilization immediately once you open the factory. That is so ridiculous. Just as his average return for Tesla stock, minus 57%.
Yeah, I don't think it's extreme. I'm just valuing them at how the automakers are valued. But when Pierre talks about 20 million cars sold by 2030, if you look at the amount of cars that Tesla sold last quarter, to get to that number, they would literally need to build a new plant every quarter, fully sold out for the next literally 12 years.
Elon Musk says that we will need about 10 or 12 gigafactories eventually. And Tom Zhu told Matthew that Giga Mexico will be built at the same time as another gigafactory. We already got Fremont in California, we got Texas, we got Germany, we got Shanghai. We will now have Giga Mexico, and then another one that is not announced that will be built together with the one in Mexico. And then do we count the Nevada factory that is going to be building semis? If we include that, we already got 7. I don't think we need to include the one in New York. So we would only need to build, if we need to get to 10 factories, just 3 more. And that would get us to 10. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.